is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's being taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
Hi, my name is Phil Grande, philsgang.com. You know, every day we read in the paper or we hear on radio or TV how the market is rigged. So what? It's rigged to go up, not to go down. You know this market hasn't pulled back 10%, not 10% since 2011, and you're not in this market. You want the market to be rigged. All you got to know is when to get out before it blows up. That's why you become a gang member, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Do you think gold is money?
No.
Gold's not money? You got to be kidding. That's Ron Paul asking Ben Bernanke. Of course, Ben Bernanke lied. Of course, gold is money. But here's what he doesn't want you to know. They've been suppressing gold, trying to push gold down because it competes with the dollar. The Federal Reserve doesn't sell gold. They sell dollars. Gold competes. Gold will dictate in a free market where interest rates should be. That's the last thing they want, because they manipulate interest rates. Now, has your broker told you that? Has your planner told you that? No. Well, I told my gang that. I explained it to them, and we positioned ourselves to be in a perfect position for gold and copper as it dropped. That's why you want to join my gang, Phil's Gang. We're right on top of this. philsgang.com. Join today. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. You know, everybody, the hot stocks Apple or Google, whatever it is, it doesn't matter. What people don't understand is every stock is the same. If the institutions buy it, it goes up. If they don't, it goes down. It doesn't matter the name. That's why we use charts to identify money in, money out. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Generally agree that monetary policy was not the main reason for the housing bubble.
What are you, nuts? Of course, monetary policy was the reason for the housing bubble. That's Ben Bernanke. Hi, I'm Phil Grande, philsgang.com. He's lying. Listen to this. In December 2000, interest rates were 6.5%. Within the next 30 months, Bernanke dropped them down to 1%. Because of that, mortgage originations grew from 1.5 trillion to 5 trillion. That was by the end of 2003. The housing bubble was inflated, and it was continued being fueled by his policies, which eventually we saw mortgages that grew from 28 trillion mortgage to 50 trillion. He lied. But here's the important thing. We were able to take advantage of that here at Phil's Gang, and we were able to make money because of it. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Our economy has been moving.
Yeah, in the wrong direction. This is the same guy that told us we could keep our doctor and we could keep our health insurance. Hi, I'm Phil Grande, philsgang.com. Look, I have the best teaching format in the country when it comes to learning how to invest in stocks. People will tell you that. Look, we can't listen to Wall Street. We can't listen to our government. We listen to our charts. That's why you join philsgang.com. Food stamps have exceeded 45 million for 50 straight months, and he's telling us things are good. What are you, nuts?
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of Phil's Gang. You know, on May 29th, I warned that a stock market crash was coming. I also warned in July. Both times, I was watching my technology, my PT2 chart, and it turned from green to red. Both in May and July, we had substantial warnings. We saw the industrials fall. We saw that the market, the Chinese market was falling, was getting worse. Oil was falling. Copper was falling. Everything was falling. But again, CNBC was telling you, hey, things are cheap. Diversify. Everything's wonderful. But my chart was giving me something different. And on both those occasions, both in May and July, I told my gang, let's short the stock market now, because my PT2 chart indicated a sell-off was coming in. And we did. And we had a wonderful ride all the way down. Join my gang, Phil's Gang.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. I'm here to help you. I'm tired, and you should be tired, of listening to these financial shows like CNBC where they're all geniuses and they're always wrong. Look, stop worrying about the price to book and the price to sales and all the stuff they tell you you think you need to know. You don't need to know any of that. Anybody can make money in the stock market using charts. It's about money flow. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
The policy that is supported by some 90% of the American people. It was supported by a majority of NRA households. But the gun lobby mobilized against it, and the Senate blocked it.
Unbelievable. Here we are. The stock market's down 427 points. The economy is collapsing. We got a major problem where our oil prices could really escalate, which would be great. I told you this was going to happen because of the problems they're now having with the Saudis and Iran. Major things are going around the world. They're going on today. And he's sitting there talking about guns. Can you believe this? Welcome to Phil's Gang, coast to coast around the country, off the Wall Street Radio Network. Hope you had a great new year. Now we're on to a new year. The market is down over 400 points. This is not new. If you remember, a week before the new year, I said this was going to happen. I laid out all the different reasons why the stock market was setting up for a crash. We went through every reason. And I told you that one morning we're going to wake up and you'll see this market's down about 300 points. It's going to gap down about 300 points. Exactly what it did today. Everything I said it was going to happen happened. We got our gang members short. And I kept telling you, I kept saying for weeks, I kept saying, you got to learn how to be short the market. It's no big deal. Wall Street makes you think it's a big deal, but it's not a big deal. It's easy. It's just as easy as putting your car in reverse. But if somebody drilled in your head every day, since you sat next to your father when you're a little kid driving a car, and he said to you every day, we can't put this car in reverse, you'd believe it. You would believe it. Then you're a teenager. You can't put the car in reverse. You'd believe it. Exactly what these guys did on Wall Street. These banksters on Wall Street. These banksters, remember, they're there for their own, to benefit themselves. Not you, not me. And that's what they've done by getting you set, get a mindset, I better not short a market. I only can make money buying stocks. Look what happened. So if you were with me today, you'd be very happy because the market's going down. I had everybody, my gang, I told my gang a few weeks ago because the market, I said, is going to drop like this. I said, let's position ourselves in what they call an inverse, meaning that if people are afraid to bet the market's going down, shorting, then they have what they call an inverse. You inverse it. You can buy. It's called an inverse. The symbol is SH. So it's the same thing. So when the S&P starts going down or the Dow goes down, SH is for the S&P. When the S&P starts dropping, all you do is you buy the inverse, which is SH, and SH goes up, and today it's going up beautifully. So that's what's going on. So let's talk about this. So now everyone's talking about, again, China. This is all about China. This is not about China. Here we go again. China? Okay, sure. There's a little bit to do with China, but that's not the reason. Do you remember back in August we had the same situation? In 3 days, a 1,900-point drop in the market. Same thing, China. It's all about China. Really? No, it wasn't about China. It had nothing to do with China. You know what this has to do with? It has to do with a stock market that's been financially engineered since 2009, and they just can't put the market over the top. For the last 400 days, this market's been floating sideways. It stopped going up. The last 9 months, it consolidated to a range from the high to the low about 4%, 4.5%. The range got narrower and narrower. 33 times they tried to break out in that narrow range. They can't do it. Why? Because they're not borrowing any more money. They put into the stock market. Who's they? The hedge funds. I pointed that out last week and the week before, that the hedge funds have borrowed so much money. If you recall, in the year 2000, the amount of money they borrowed was up 325%. The earnings actually were better than our earnings today, and the market crashed. So they borrowed more money in the year 2000 to buy stocks, and their earnings were better than it is today, our earnings today, and the market crashed. Then, in 2008, they borrowed money, the hedge funds, to buy stocks called margin. It was up about 4.25%, went up about 425%. The earnings were better than they were today, and the market crashed. Now, they borrowed so much money this time, and I told you this, with so few people, that the amount of money they borrowed has increased by 600%. And I told you, that reason right there alone, they cannot borrow any more money, and that is why the stock market kept going sideways for the last 9 months. That's why they tried 33 times to break out, and they couldn't, because there's not enough money. They're not borrowing any more money, the hedge funds. Because once they start seeing the market can't break out 33 times, then they stop buying on the pullback. So that's what happened. That's a signal. That's a message from the market. The beautiful thing about the stock market, it's messages. They send you messages. Now, they don't call you. They don't email you. But they send you messages on a chart. So it told me, and I told the gang, look, they're not buying. Every time the market pulls back, what do you hear from everybody on CNBC? Buy on a pullback. Buy on a pullback. I said, they're not buying on a pullback. So how could Yellen celebrate, bring in the new year, 2016, with a straight face, looking at the camera saying everything is under control, the economy's doing much better, labor market's doing much better, everything is fine, we're in fine shape. Here the market opens down, we're down 427 points. I told you this was going to happen. How could she, with a straight face, lie like that? She lied. Yellen also knew when she made that lie. For 3,460 days, they printed money, the Federal Reserve. They printed over $2 trillion of interest-free money to give to the corporations so they could buy their own stocks back to push up the stocks, because the stocks couldn't go up because companies weren't making earnings. People weren't spending. So if they're not spending, company stocks not going to go up. If people aren't spending, companies aren't making profits, their earnings drop, and stocks are supposed to drop. But instead of letting that happen, $2 trillion, $2 trillion, they gave to the companies. No, don't let your stocks drop. Keep buying your own stock. That way there, if you have fewer shares, then we can spread your profits over fewer shares. So if we spread your earnings over fewer shares, the stock will go up. But there's a problem with that. There's no value to the workers. They don't get any value out of it, and the companies don't get any value. Do you know that our companies in the United States right now, the S&P 500 companies, they have not been plowing money back into modernizing these plants, modernizing equipment. Some of this stuff is 60 years old. We can't compete in the future because the CEOs, these greedy people, decided they're going to take the profits, borrow another $2 trillion, buy all their shares, so there's fewer shares, so there's nobody buying their stuff. It doesn't matter. They'll still run that stock price up by buying their own shares back. And then the earnings finally came out. The last quarter, when we closed the books last week, closing out the year, earnings growth for the last quarter, but ugly. Going to decline almost 4.7%, almost 5%. Are you kidding me? That will mark the first time the index has seen 3 consecutive quarters, year over year, of a decline. Earnings Earnings decline, I should say, since quarter one in 2009 through quarter three 2009. And I told you this was going to happen. I hope you're a gang member. Now's the time to join the gang. Phil's Gang.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Generally agree that monetary policy was not the main reason for the housing bubble.
What are you, nuts? Of course monetary policy was the reason for the housing bubble. That's Ben Bernanke. Hi, I'm Phil Grande, philsgang.com. He's lying. Listen to this. In December 2000, interest rates were 6.5%. Within the next 30 months, Bernanke dropped them down to 1%. Because of that, mortgage originations grew from 1.5 trillion to 5 trillion. That was by the end of 2003. The housing bubble was inflated, and it was continued being fueled by his policies, which eventually we saw mortgages that grew from 28 trillion mortgage to 50 trillion. He lied. But here's the important thing. We were able to take advantage of that here at Phil's Gang, and we were able to make money because of it. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
They just told us right away that we're going to house you, we're going to feed you, and every single one of his medical bills is just all taken care of.
Saber que el tratamiento es completamente gratis nos quita una preocupación de encima.
We have phenomenal research, outstanding clinical care, and the generosity of public, which allow us to treat patients regardless of what it takes. And that's what makes St. Jude so magical.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com.
From the perspective of the U.S. economy, I think we've seen continuing signs of strength.
Continuing signs of strength? What are you, nuts? Household spending dropped to its lowest level since 2008. Retail sales dropped to its lowest level in 9 years. Wages to its lowest level in 30 years. Disposable income to its lowest level in 40 years. Home ownership to its lowest level in 30 years. What's he talking about? That's Jack Lew, our Treasury Secretary. We can't trust anything that comes out of Washington or Wall Street. And that's why I want you to join Phil's Gang. My name is Phil Grande of philsgang.com. Well, the reason you stay away from the stock market because you're fearful, because no one has taught you how to invest. You go to school to learn how to do math. You go to school to learn how to drive. Why don't you go to school to learn how to invest using charts? Join my gang, philsgang.com, the best teaching format in the country when it comes to stocks.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. You know, many people left the stock market after the crash, and here's why.
Responsibility begins and ends with our partners and our shareholders, and that's it.
And that's still going on. That's your planner. They don't represent you. They represent themselves, your money manager. But you have to make a change. You can't change them. You make the change. Join my gang, philsgang.com, so that we can take care of you. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. At philsgang.com, we promote core technicals and chart analysis that enables each Phil's Gang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Phil's Gang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264. Welcome back to the Phil's Gang Show. This segment is brought to you by philsgang.com.
I think the economy continues to improve, but the issue isn't the economy as such as it is prices that have been decoupled from the economy, from fundamentals, by lots of liquidity injections. So the question is, can you maintain this gap?
All right, welcome back to Phil's Gang. Let me explain what he's saying to you. Let's put it in English. What he's saying is this. There's a gap. Stock prices went up 50% more than they should have gone up because they printed money, the Federal Reserve, and injected it into the stock market to push the price up because consumers were losing their jobs, starting with Obamacare, going from full-time to part-time. 28 million people were thrown out of full-time into part-time. And when you have all these people on part-time work and they're not creating jobs, they're not creating good jobs, and they're killing the small businesses on purpose by killing the small community banks, Obama went in with 87,000 pages of new regulations, including for the banks, to destroy the small banks, so to destroy small business, because small business depend on community banks. That's where they go and get their money. If you're in Williamstown or you're here in Sarasota or you're in Denver and you have a small business, you employ 4, 5, 10, 15 people, you go to your small community bank. Obama made sure those banks would have to turn around and merge with the big banks. That's exactly what the idea was with Glass-Steagall. That's what Greenspan did with Glass-Steagall. He turns around and he says, I'm going to destroy all the banking and make sure that we get the 5 biggest banks, Goldman Sachs, JP Morgan, Citi, Bank of America, and we'll take all those banks and we'll merge them all together. We'll come out with the 5 largest banks are going to control about 80% of the mortgages, 80% of the business in this country. And he did the same thing with small business. So small businesses was the key. Small businesses in this country was the solution to the problem we had with the recession. The first problem, we should have let the recession get deep. Bush should have never propped the banks up in 2008. When they collapsed, he should have just let the free markets work, let capitalism work, and let the market work. Let these banks go down, take them, break them up, give them to the 8,000 other banks, we'd be in good shape. You're never going to have a good recovery, a sustainable recovery, where you get good commerce, where you get good consuming, where you get people with good wages, until you first let the economy go into a real deep recession. All the other presidents did that. This one doesn't do it. Bush didn't do it. When you let it go into a deep recession, you get everybody's balance sheet cleaned up. Individuals, corporations, banks, clean it up. Get rid of all the garbage. It's hurtful. It hurts for about 18 months. But when you come out, you have a strong economy. You have an economy coming out the first 18 months where you're producing about 300, 400,000 jobs every month. And then you level off to about 225,000 jobs after that. You have a GDP of about 5%. 4% worst case. No, we've been for 9 years at just a little bit below 2%. That's our problem. We've never had everybody looks at the rally like, oh, look, the economy's coming back. The economy never came back. Jobs never came back. Here we are, the new year, and we still have something like 10 million people still are upside down in their homes. This is crazy. For 3,460 days, he kept on printing money. This administration kept printing money, had told the Fed keep printing money and keep feeding $2 trillion of interest-free money to the S&P 500 companies to buy their stocks back. So to push their stocks up because there was no business, there's no earnings, there's no profits, so their stocks were going to drop. So now we have no growth for 7 quarters, but the stock market went up. The first quarter, 4.7% decline. Stocks went up. Second quarter declined at 0.7%. Stocks went up. Same with the third quarter, minus 4.4%, and now this quarter, minus 4.7%. See, to mask these terrible earnings that we've had since 2009, all the CEOs kept doing is plowing their earnings back into not into their businesses to buy new equipment. No IT spending. Do you know that IT spending is the first thing you look at if you're really going to have a recovery? And we've never had a recovery in IT spending. Never. That's the first thing you look at. Never have. Well, but CNBC won't talk about that. Instead, they use the profits that they did make, small as they were, added to the $2 trillion they borrowed from the Federal Reserve, while your savings, instead of getting 5% at the savings bank, you got less than 1%. Yeah, that's how they did it. That's how they did that. To take $2 trillion, print it, and give it to Wall Street at zero interest, they took your savings and dropped it from 5% down to less than 1%. So now nobody was saving, therefore there was no investing. If you get from savings, you get investing into small business to create all the jobs. None of that happened. For 9 years, this scam has been going on. The market went up 200% with a 600% increase in borrowed money to buy stocks. What are you, nuts? This is crazy. Capital expenditures in company have dropped off 50%. Do you know what that means? Capital expenditures have dropped by 50% across the board. They're not putting money back into their companies because the CEOs don't want money going in their companies. They want it in stock options. They're getting rich. They've increased their incomes by 300%. The average CEO of Wall Street gets a plus $30 million a year because they're getting the money. That's what's going on. So here we are. We closed our books out, and now the market's down 422 points. Now, usually on a pullback like this, you start seeing some big buying coming in. We're not seeing any buying come in. We haven't seen buying coming in for the last 9 months on pullbacks. And these people, they don't get it. Listen to this.
Because this is the continuation of last year with two important qualifiers. So the continuation is concerns about growth and geopolitical issues. The qualifiers, which are important, is first we're seeing cascading poor technicals. You remember me?
Oh my God, I get a headache. Talk English. You should say, you know what? The economy really sucks. And I've been telling everybody it's good because I work on Wall Street. The economy's never been any good. Never been. How can you have an economy, just because the stock market goes up doesn't mean your economy's good. Our economy and the stock market are decoupled. The stock market has nothing to do with the economy anymore. It has to do with making people on Wall Street very wealthy. We'll be right back. Join my gang. Here's the number, 877-600-GANG. Join now.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Middle-class economics works.
Works? Where? Show me where it works. You tell us the unemployment rate is 5.1%, and you only get to 5.1% by making sure people don't have a job. Think of August. August, the unemployment rate went down to 5.1% because 200,000 people couldn't find a job. If they found a job, our unemployment rate would be at 10%. Isn't this amazing? Hi, I'm Phil Grande of philsgang.com. Aren't you sick of this stuff? Aren't you sick of these politicians? They keep lying to us. You know, Wall Street does too. And how many times have you said, boy, I hate Wall Street. I hate the stock market. But that's the best place in the world to make money. But you need a lesson. You need a lesson on how to invest. That's where I come in. Join my gang, philsgang.com. It's the best teaching format in the country when you want to learn how to invest in stocks. philsgang.com.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
Hi, I'm Phil Grande of Phil's Gang. You know, on May 29th, I warned that a stock market crash was coming. I also warned in July. Both times, I was watching my technology, my PT2 chart, and it turned from green to red. Both in May and July, we had substantial warnings. We saw the industrials fall. We saw that the market, the Chinese market was falling, was getting worse. Oil was falling. Copper was falling. Everything was falling. But again, CNBC was telling you, hey, things are cheap. Diversify. Everything's wonderful. But my chart was giving me something different. And on both those occasions, both in May and July, I told my gang, let's short the stock market now because my PT2 chart indicated a sell-off was coming in. And we did. And we had a wonderful ride all the way down. Join my gang, Phil's Gang.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
Generally agree that monetary policy was not the main reason for the housing bubble.
What are you, nuts? Of course, monetary policy was the reason for the housing bubble. That's Ben Bernanke. Hi, I'm Phil Grande, philsgang.com. He's lying. Listen to this. In December 2000, interest rates were 6.5%. Within the next 30 months, Bernanke dropped them down to 1%. Because of that, mortgage originations grew from 1.5 trillion to 5 trillion. That was by the end of 2003. The housing bubble was inflated, and it was continued being fueled by his policies, which eventually we saw mortgages that grew from 28 trillion mortgage to 50 trillion. He lied. But here's the important thing. We were able to take advantage of that here at Phil's Gang, and we were able to make money because of it. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Be sure to watch the Phil's Gang Show with Phil Grande, weekdays at 3 p.m. Eastern Standard Time on various devices like smartphones, tablets, your computer, and more. Get free access to the Phil's Gang Show right in your hands at home or on the go. Simply go to philsgang.com. That's philsgang.com and click on the Listen Live link. And we'll see you on the charts.
Do you think gold is money?
No. Gold's not money? You got to be kidding. That's Ron Paul asking Ben Bernanke. And of course, Ben Bernanke lied. Of course, gold is money. But here's what he doesn't want you to know. They've been suppressing gold, trying to push gold down because it competes with the dollar. The Federal Reserve doesn't sell gold. They sell dollars. Gold competes. Gold will dictate in a free market where interest rates should be. That's the last thing they want, because they manipulate interest rates. Now, has your broker told you that? Has your planner told you that? No. Well, I told my gang that. I explained it to them, and we positioned ourselves to be in a perfect position for gold and copper as it dropped. That's why you want to join my gang, Phil's Gang. We're right on top of this. philsgang.com. Join today. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. What is Phil's Gang? Philsgang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. Welcome back to the Phil's Gang Show. This segment is brought to you by Phil's Talking Trader Stock Charts.
The whole world's down 2%, so Happy New Year, everybody. Dow's down 340 points right now, but just take a look at sectors because there's a little bit of differentiation going on. Tech is a notable weakness, particularly some of the more popular names last year, but consumer discretionary is down, industrials are down, and financials are down. So
don't you love it? They tell you after it goes down, it went down, then they tell you why it went down. Unlike me, I told you last week, told you the week before. I said, join my gang, 877-600-GANG. Join my gang. I told you, we've got big problems. This market is ready to collapse because they can't borrow any more money. The money on margins up 600%. Then we have 70 million baby boomers who are responsible, who contribute over $50 trillion to our economy. 10 are retiring every second. That means that $50 trillion is coming out of the economy. There's another big problem. Another big problem. So you got all this borrowing of money, which becomes debt to push the stock market up, and then you got all the retirees who are retiring, pulling trillions of dollars out of the market. And then you got earnings. Then you got PE ratios. You can't hold them. They're not sustainable. They're fake. Everything's fake with them for 9 years. What they think is going to go for another 19 years? This is crazy. And then he talks about China. It's the same excuse they made back in August.
Much of the concern, of course, is on China. And I think it's important just to note that this was the first day of the China's circuit breaker, the system-wide circuit breaker. So the CSI 300, which is a big index in China, is the main benchmark there.
So a circuit breaker came in and shut down the trading in China. Wait a minute. Wouldn't you want to have been in a position to short the market like we are before that happened? Oh, now he comes and tells you, oh, China's a problem. It's going down. Let me tell you about China. China was a problem in the year 2012. I showed my gang on a chart. From the year 2008, when the market crashed, up to 2012, it was China that was pulling us up out of the hole, except for, or in addition to, all the quantitative easing, QE 1, 2, and 3. The $3.7 trillion they printed and pushed into the market. Then the $85 billion a month they were printing every month. $85 billion to go. The Fed went and bought the 10-year treasuries to drop the yield, make the yield go down. So it was so unattractive that the Chinese and the Saudis and the French and the Germans no longer wanted to buy our 10-year treasuries, didn't want to buy our debt. So it forced them into the stock market, pushing it up. So you had $85 billion a month pushing the stock market up. You had also over $3 trillion pushing the stock market up. Another $5 trillion pushing the market up from stock buybacks. They provided the money to buy. And then you had another $2 trillion pushing the stock market up from hedge funds going out and getting money from the Federal Reserve, borrowing it to buy stocks. Are you nuts? Now, China, what moved the market up a little bit was China in 2009. They started a big building spree, massive investments in construction, but it was a massive borrowing spree, massive borrowing in China. They built all these cities, condos, unbelievable what they did. But then it came to a halt in 2012. Came to a halt. And that's when we came in and started to do stock buybacks. That's when we threw in the $2 trillion in stock buybacks. See, we were fine from 2009 to 2012 as long as China kept our commodities going, because it was China's use of copper and steel. All of the commodities they needed during that construction kept driving the bank stocks up, which drives our economy stocks up, our stock market up. But then that stopped in 2012. So what they do? Then all the elitists, they had to come in and figure out a way to drive the market up higher. And they came up with it. They do stock buybacks in 2012. That's when that whole madness started, in 2012. Are you kidding me? Now it stopped. That's the problem. It stopped. So when it stops, the market can't move. And the market went sideways for 9 months. It can't move. So when the market did drop in August during that 9 months, remember, it wasn't just China. Because remember, China stopped in 2012. That's when they had a problem. I mean, the money that they borrowed for construction was huge. But that's over now. We knew that back in 2012. Now they're using that as an excuse? What, are you kidding me? It's just ridiculous. And the other thing too, when they turned around and they started to manipulate gold. See, one thing, the reason why you got to get rid of the Federal Reserve, because everybody believes, Congress and everybody else, you need the Federal Reserve because they raise interest rates when you need it, and they lower interest rates when you need it. When the economy's going down, they lower interest rates to try to stimulate the economy. Are you nuts? Look what's happened. So they've left interest rates down for what, 33,400 some odd days. Now they have no place to go. You know what's going to happen? You know that 0.25% interest rates that they raised? They're going to take that back. You watch. They'll take that back now. She lied to us, telling us the economy is good. The reason she lied to us because she was manipulating gold, because gold influences interest rates. It influences the strength of the dollar, and it influences treasuries. You can't have gold going up. It competes against the Federal Reserve, what they do. You go back into the 60s, when the Federal Reserve held in reserve for our country and other countries around the world, and they held at Fort Knox, the New York Fed Reserve, they held 25,000 tons of gold. So the Fed decided to cut gold reserve to about 5,000 tons, 8,000 tons. So here's what they did, the crooks. So they to manipulate gold, they want to make sure gold goes down because the Fed wants to influence interest rates. They want to influence the dollar. They want to make sure the dollar's going up, not down. All fake. So they turn around and they come up with this neat idea. They said, what we'll do is we'll start a little company, a little exchange. We'll call it the London Gold Pool. This way we can reduce gold reserves. We can put gold on a fire sale. We'll dump gold from 25,000 ton to 8,000 ton. What we'll do, we'll put a fire sale price of $35 an ounce. And then that's what they did. So they dumped from 25,000 to 8,000 ton. Now, soon countries are demanding their gold. Well, the gold was gone. Because remember, it's in the Fed's interest to make sure there's no gold around. So what the Fed came up with is a real cute trick. They came up with an idea to create a substitute on paper for gold. So instead of having actual gold, they decided we'll create a substitute. We'll call it a gold derivative. And it would be traded, a piece of paper, and it would be traded just if it was real gold. Are you kidding? It would serve as a vast imaginary supply of gold. And therefore, nobody's going to ask for delivery of their gold. There's not going to be any demand. They figured this is how we're going to screw everybody. Why don't we just turn around, we'll dump all the gold, we control the price of gold, we control everything now, and then what we'll do when people, they won't demand their gold back, because what we'll do is we'll substitute it on paper, we'll call it a gold derivative, we'll be able to trade it, and who the hell is going to want their gold back when they got a gold derivative they can trade? So there was no demand, and there was never any demand. Because they knew most of the gold investors would choose to leave their gold on deposit with the bullion banks that sold them the real gold, which is now imaginary gold. What a bunch of guys, these guys on Wall Street. Unbelievable, isn't it? Because you got to keep gold prices down. So now this enabled the Federal Reserve to keep control of the price of gold, which control our interest rates. When the Fed lets gold price get too high, then gold starts setting the interest rate. Oh, that's the last thing they want. They don't want that to happen. And then it controls the dollar. We'll be right back. Join my gang right now. 877-600-GANG. This is what you've been waiting for. A break in the stock market to join the gang, and here it is.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. At philsgang.com, we promote core technicals and chart analysis that enables each Phil's Gang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Phil's Gang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. I'm here to help you. I'm tired, and you should be tired, of listening to these financial shows like CNBC where they're all geniuses and they're always wrong. Look, stop worrying about the price to book and the price to sales and all the stuff they tell you think you need to know. You don't need to know any of that. Anybody can make money in the stock market using charts. It's about money flow. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com, Phil's Gang Radio Show. You know, we just went through a 1,900-point stock market drop, fastest drop ever in 2 days. Most of you panicked. At Phil's Gang, we didn't look at it as a crash. We looked at it as an opportunity because we were short. Why? Because I was able to teach my students how to read a chart so in advance they would know that the market was going to go down. It's all about learning. It's always amazed me. Our whole life, someone teaches us to play baseball, someone teaches us to ski, someone teaches us how to drive a car. But there's nobody there to teach you how to invest in a stock. And that's where I come. I think I have the best teaching format in the country. Check it out. It's philsgang.com. So you'll be so comfortable, you won't care if the market's going down or the market's going up. Join my gang, philsgang.com.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264. 877-600-4264. There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com.
From the perspective of the U.S. economy, I think we've seen continuing signs of strength.
Continuing signs of strength? What are you, nuts? Household spending dropped to its lowest level since 2008. Retail sales dropped to its lowest level in 9 years. Wages to its lowest level in 30 years. Disposable income to its lowest level in 40 years. Home ownership to its lowest level in 30 years. What's he talking about? That's Jack Lew, our Treasury Secretary. We can't trust anything that comes out of Washington or Wall Street. And that's why I want you to join Phil's Gang. My name is Phil Grande of philsgang.com. Well, the reason you stay away from the stock market because you're fearful, because no one has taught you how to invest. You go to school to learn how to do math. You go to school to learn how to drive. Why don't you go to school to learn how to invest using charts? Join my gang, philsgang.com, the best teaching format in the country when it comes to stocks.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264. Welcome back to the Phil's Gang Show. This segment is brought to you by Phil's Talking Trader Stock Charts.
Yeah, welcome back to Phil's Gang. You know, once a bubble is created, and this would be our third bubble, you can't reverse it. Okay? In other words, you can't, once it starts dropping, you can't keep pumping it up because there's only so much money. And when you've increased margin money, the amount of money is being borrowed specifically to buy stocks by who? The hedge funds. That's who you watch. You watch that chart because once they stop borrowing money, the market can't go up, and that's why 33 times it couldn't break out. I kept telling you, join my gang, join my gang. But everybody believes the market's just going to keep going up. It's all you hear on CNBC. I love it when they come in and tell you how P ratios are cheap, stocks are cheap. No, they're not. I told you the other day, if you have a stock that says it's $52, it's worth half of that. If you have a stock that's $25, it's worth half that. These stocks are 50% overpriced for the last 9 years. Because the reason the stocks went up is not because companies made money and profits and it went down to the bottom line. They didn't make profits. They weren't making profits. Are you kidding? There was no consumer discretionary spending. If you look at, just go out and look at what you're paying for healthcare premiums right now in your insurance. Do you have extra money to go buy that thing you wanted to over Christmas? That extra Christmas gift? No, because we don't have consumer discretionary spending. Because remember, that consumer discretionary spending is important. 70% of our economy's growth comes from consuming. So now you go look and take a look at what happened over this year here, over earnings, and you're talking that the first quarter, we have a negative of 4.7, almost 5% decline in our growth. Where does growth come from? Consumer discretionary spending. So instead of creating jobs, what do these morons do on Wall Street and the Federal Reserve and our president? Create more debt. Create more debt. Let people go spend more. Are you kidding? Second quarter, negative 7%. Why? Consumers have to pay their bills. There's no discretionary spending. And our economy, our growth comes from that. That includes automotive, household durable goods, textile, apparel, leisure equipment, you on and on. Hotels, restaurants, leisure facilities, media productions, all kinds of services, retails. Are you kidding? That's why we closed the year down 4.7. That's why we were short. And when we're short, just like in August, we had a 14% drop. Let's say we just got 10% of that. Say we got 7% of that on our money. What's wrong with that? But we knew in advance, didn't we? We knew in advance, didn't we? Same thing when we had the break today. The market's down 7% one day. But didn't I tell you last week this would happen? Didn't I tell you to join the gang? And I gave you all the reasons why. The market was setting up for a perfect storm for this market to collapse. The biggest was debt. 19 trillion in our debt, our national debt. But that's not it. Not just 19 trillion. That's trillion that's funded. That's debt that's funded. I told you we had 216 trillion that's unfunded. That's over 300 trillion in debt. That's $625,000 per person. I said, that's the reason the market's going to drop right there. That's one reason. The $50 trillion coming out of the economy because retirees, every 1 second, 10 are retiring. There's 70 million of them ready to retire. That money's gone. So that money's gone. They're not putting the CEOs, they're not taking their profits and putting it back into the company to update the companies, to update their buildings, to update their equipment, because that creates another 10 jobs, and those jobs create another 10 jobs. That's called the multiple effect. For every one job, you create 10. It's like on a construction site. For every one guy you hire on a construction site, you create 5 somewhere else in town. They have to hire another baker at the coffee shop, another guy at the cleaners. That's how it works. It's the multiple effect. None of that's happening. So instead they said, never mind, we can fool everybody. We'll fool everybody. Why do you think everybody's going to Trump? Because you feel it. You don't feel. Do you really feel when you look at the stock market and we're at historic highs and they come on CNBC and the rest of these shows and tell you, well, look at the market. It's up 200%. Do you feel it? Do you feel it when they say, look at this, labor's improving. The labor market's improved. Do you feel it? Have you gotten overtime lately? Of course not. Do you feel it? Do those 6.5 million homeowners that still are underwater? That's 30% of all the homes that people have are underwater. 6.5 million owners. Are you kidding? Do you feel it? No. But Yellen said, we're fine. Everything's good. Everything's good. We're an economy driven by productivity, by jobs. But this president didn't want productivity. He didn't want jobs. He instead decided to stimulate. How? Print more money. Print $85 billion a month to buy treasuries, to scare everybody out of the bond market into the stock market. Print another $3.2 trillion to shove into the stock market, push those stocks up because there was no earnings. Why? Because there's no consumer discretionary spending. But see, in the meantime, while they're playing all these games, you're going to be on the right side as an investor if you're with me. Join the gang. 877-600-GANG. The market's down 307 points. Now, what they're going to do in the next couple of days, they're going to try to rally the market back up. It's called the plunger team. They're going to come in and try to push this market back up. And all you got to do is look on a chart and look at the previous high. As long as it doesn't break over that previous high, it's going to go back down. And when it makes the low of the today, figure out what the low of the day was today in the S&P. If it breaks that low, short it by buying SH. If you don't know how to do it, join my gang right now. I'll show you how to do it. It's easy. Every day we have the same 5 stocks. Every day. Caterpillar, Goldman Sachs, Schlumberger, Intel, IBM. Every day, all year long, we're on those stocks. You haven't got to do a thing. I'll tell you when to buy. I tell you when to sell. But here's the good thing. You learn why we're buying. You learn why we're selling. But here's the cool thing. Because you're getting the other side of the trade. You're getting the short side of the trade. I said over and over and over. I said, how do you expect to only make money to retire? How are you going to make money to retire if the only thing you do is the only thing you're allowed to do is buy a stock? Don't you think you'd make money much faster, accumulate money much faster for retirement if you were shorting a stock? If you made money with the market going down? Did you ever figure out why they won't let you do it? Why they talked you out of it? Because they know, as long as they can scare you, you'll only buy stocks. Then they know they also control what? They control the interest rates. They rise the interest rates when they want bubbles. They lower them when they don't want bubbles. They have a little bubble machine called the Federal Reserve. That's why you got to get rid of the Federal Reserve. All you got to remember, look at your bond. Look at the 10-year Treasury. When the 10-year Treasury starts going down, the yield, the interest rate starts going down, that's tell you the market's going to go south. That's right. Just look at the yield. That's telling you the market's going south. The dollar starts going down. Just put up UUP. If that's the dollar. If you see it going down, and you see both of these going down at the same time, it means the economy's getting worse. And then you know when you're going into a recession, real easy. You take the 1-month Treasury, and if you see the 30-year Treasury, the 30-year Treasury or the 1-month Treasury is higher than the 30-year Treasury bond, you're going into a recession. It's not hard. I will do it for you. I will do it for you. I told you this year here, we will see oil going up and we'll see gold going up. Now, they're going to try to cut this loss in half today. All right, they already peeled off 100 points. It was almost up. It was over 400 points. Now they peeled 100 points off. The plunger team will come in and try to move this market up in the next couple of days. It won't work. So this is a great opportunity to join the gang. And when we make a new low, you just buy SH. All you got to know is if you want to make money when the market's going down, you just buy a symbol called SH, and we do it for you. You don't do a thing. What's better than that? And then all I ask is to help the kids. That's all we ask. That's all we ask. So this has been a great day. This was a great start of the new year. The market was down 400 points. Now it's down 292 points. This is when you want to join the gang. I told you this was going to happen, and now it's happening. See you on the charts. Join my gang. 877-600-GANG.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.